have you ever looked at the world of investing and just felt completely lost? Like you're staring at a giant puzzle with a million pieces? Well, today, we're going to hand you the solution. We're talking about unit trusts, a tool that's literally designed to take all that confusion and turn it into a clear path toward your financial goals. So if you're ready to finally make sense of it all, you are in exactly the right place. I mean, look at this. Does this feel familiar? You know all the pieces are supposed to fit together. You know there's a bigger picture of wealth and financial freedom, but man, where do you even start? It can feel pretty overwhelming, right?
And that really gets to the heart of the problem for so many of us. You absolutely want to grow your money, of course you do, but you've got a life, a job, a family. You just don't have the time to become a full-time expert on the stock market. And that's a challenge almost every single person faces when they think about investing.
So, this is what we're calling the modern investor's puzzle. How do you get in on the action and grow your wealth without having to basically get a degree in finance?
Well, how do we solve it? Turns out there's a really popular answer: the unit trust. You can think of it as just another way, an alternative channel, for an everyday investor to put their money to work in the markets.
So let's properly introduce this thing. What in the world is a unit trust, really? And more importantly, how does it help you solve that puzzle we were just talking about?
Okay, here's the big idea. A unit trust is basically a giant team effort. It's an investment that pools money from tons of different people just like you, and creates this one big pot of cash. Then that money is handed over to professional managers. Their job is to invest it for you across all kinds of different things, like stocks, bonds, you name it. It's literally teamwork for your money. All right, now for the fun part. Let's pop the hood and see how this whole machine actually works. You'll see there are a few key players that make sure everything runs smoothly and, most importantly, safely. First up, and this is the most important person in the room, the unit holder. Hey, that's you. When you put your money in, you're not buying one specific stock. Instead, you're buying units in the fund, and each unit represents your own little slice of the entire investment pie.
Then you've got the management company. Think of these as the brains of the operation. They're the professionals, the expert fund managers. They're the ones doing all the heavy lifting, the research, the analysis, picking the investments. You're basically hiring their expertise to handle all those complicated decisions for you.
And finally, there's this really crucial player, the trustee. This is like the security guard for your money. It's a totally independent company, usually a bank, whose only job is to hold all the assets and act as a watchdog, making sure the management company is doing everything by the book and always acting in your best interest. They're the guardian of your investment.
And this diagram just lays it all out perfectly. You see, you, the unit holder, are at the top. You put your money into the fund. The manager runs the fund, and the trustee watches over everything to make sure your money is safe. It's a brilliant little system of checks and balances designed to protect everybody. So, after your money gets pooled together with everyone else's, what's next? Well, the fund manager gets to work. They take that big pot of money and start investing it across a huge range of different assets out there in the financial markets. And what this creates is something called a diversified portfolio. You've heard the saying, don't put all your eggs in one basket, right? Well, this is that idea in action. Your money isn't just in one company's stock. It's spread out across shares, government bonds, cash, maybe even other funds. And that is so powerful because if one investment has a bad day, it doesn't take your entire portfolio down with it.
Okay, so let's get to the bottom line. How do you actually make money from this? Well, there are really two main ways. The first is growth. If the investments inside the fund go up in value, then the value of your units goes up too. Simple. The second is income. The fund collects things like dividends from stocks or interest from bonds, and then it pays those earnings out to you.
But, of course, let's be real. There's no such thing as a risk-free investment. So it is absolutely essential to look at this with open eyes and understand both the good and the not so good. Let's weigh the trade-offs.
And this chart lays it out so clearly. On the plus side, you get that powerful diversification that reduces your risk, you get professionals making the tough calls for you, and it's super easy to get started. But on the other side of the scale, you have to remember, markets go up and down, your fund's success really depends on how good the manager is, and yep, there are fees involved that can eat into your returns.
So how do they figure out what one of your units is worth on any given day? They use a little something called the net asset value, or NAV for short. It's actually pretty simple. Every day, the fund adds up the value of everything it owns, subtracts any debts it has, and then divides that final number by how many units exist. Boom, that's your price per unit.
And hey, remember those fees we just mentioned?
This is usually where you see them. The price you actually pay to buy into the fund is that NAV plus some kind of service charge. It's just something you got to be aware of when you're getting started.
And there you have it. You now know who the players are, how the machine works, the risks, and the rewards. All the pieces of the unit trust puzzle are officially on the table. So the only question left is for you. When you think about your own financial picture, is a unit trust the missing piece you've been looking for?